Good afternoon, everyone. My name is John, EVP of here at Angel Oak Mortgage Solutions. We're going to cover our bank statements today on our webinar here. I'll introduce our subject matter experts here in about a minute, just to go over some housekeeping. This is going to be recorded. This will be sent out before end of day tomorrow. And everything we're doing is from our website. So just so, again, this is being recorded. Put your questions in the queue. If we don't get to your questions, we will have your account executive reach out to you. Give some people some logging in here. So let's just wait a minute. Hope that everyone's having a great month so far. And we'll get probably in about 30 seconds, we'll get started here. So I'm located here in lovely Dallas, Texas. All right, let's get started here. My name is John Gemini, EVP of Production here at Angel Oak Mortgage Solutions. I've been with Angel Oak probably, it's going to be 12 years in June. So it's been a great ride. And obviously we're the leader in the non-QM space. I'm going to start with Drew. Drew, please introduce yourself.
Hi, everybody. My name is Drew Ruggieri. That's difficult to pronounce, so just say Drew. I'm based out of Southern New Jersey. I've been in the mortgage business for about 27 years, and I am coming up on a 7-year anniversary here with Angel Oak.
Yeah, Drew's having a great month, and I had a great year last year too. So continued success to you, Drew. Jack Stevenson, please introduce yourself.
Hey guys, I'm Jack. I've been with the company for about 6 years, actually an account rep for about 4.5 years. Started out sending disclosures on files for about 1.5 years. So, but yeah, happy to be here, guys, and just walk through bank statement loans with everyone.
Yeah, guys, hopefully today you'll walk away here. We do a deep dive into the bank statement. So we're going to talk about credit. We're going to talk about the 1003. We're going to talk about highlights of our program. We've got some great tools on our website for pricing. We're going to show you how to submit a pre-qual, or what we call internally a quick qual. And then at the end, we're going to show you, I believe, which is one of the most powerful marketing portals in lending. So, but before we get started, we're going to launch a poll here. So who has originated a bank statement loan in the last 12 months? And while you guys are participating in this poll, this is the fastest growing segment of the workforce out there. And yesterday I shared with Jack, some national data that's every month. And we all know what happened about 6 years ago, and that was COVID. And it spiked about 25%. New business applications spiked 25% in 2020 over 2019, and it continues to run strong. There hasn't been a month since COVID that 400,000 new business applications have been applied for every month since COVID. So, and I don't know why, but I can never see the poll results. So Jack or Drew, if you want to help me out here.
Yeah, we're about 50-50, 16-16, now 17 and 50-50.
Okay.
Yeah.
Great. That's so 50-50. That's pretty strong. We're usually, which thank you, that we're usually running around, 70-30, 60, maybe 40. So we have some experienced people here. Hopefully the other 50%, by the time we're done with this webinar, you're going to feel really confident in going out there and looking for that fastest growing segment of the workforce out there. So, all right, Jack, let's get us started. Again, everything's going to be done from our website. And let me know if I need to blow this up a little bigger, Jack.
Everything looks good now. Go ahead and.
Okay.
Yeah.
So, Jack, give us some highlights of our bank statement program.
Yeah, of course. So the bank statement program, loan sizes up to 4 million. Obviously, we love to have those if you get those jumbo loans with a minimum loan amount starting at 150. So everything in between 150 and 4 million is a potential candidate for our bank statement program. We allow purchase, refi, cash out, also rate term refinance and delayed financing on the bank statement program. So don't feel like it corners yourself to a specific market. It's just purchase, rate term, cash out, and delay finance if it's within 6 months, and the borrower used interim financing or used cash to purchase that house. It's also, the bank statement program is also available for owner occupied second homes and investment properties. So obviously not limiting yourself to just an owner occupied property. You can also go second home and investment on the bank statement program. The way it works is we're going to calculate the borrower's income using either 12 or 24 months of business or personal bank statements. So ultimately, we're calculating the borrower's income based off of the deposits coming into a business or personal bank account. Okay, instead of looking at your returns, transcripts, we're just going to use the bank statements as qualifying income. The borrower specifically can own as little as 25% of the company for us to use that business as qualifying income. So don't think your borrower is limited to 50% ownership, 100% ownership. We can go all the way down to 25% ownership of that business to be able to use that business as qualifying income. With that being said, something I want to mention on the 12-month income review, we still need 2+ years of self-employed history. We actually do have a 1 to 2 year self-employed history program, but specifically, after looking at the bank statements as the way it's listed on our website, we need 2+ years of self-employed history. But if you do have someone who's still 1 to 2 years self-employed, please bring those scenarios to us because we do have an option for them on the bank statement program.
Yeah, Jack, that's a big program because you have, like I had a roofer come to my house yesterday. He just started his own business 12 months ago, but he's been in the roofing business for 10 years. So, and you have, I know Scotty uses the example of a doctor who's still doing his rounds at the hospital, but started his own practice 12 months ago. So those are really, good scenarios. Just think about that when you're looking at for self-employed borrowers.
Right, borrowers who just have had experience in that industry and a history of performance in that industry. For us to be able to say, hey, you're between 1 to 2 years, it opens up an entire new qualifying space for those borrowers.
Yep.
Obviously, we do have a 1099 option available, which is another program. We can also do the 1 to 2 year self-employed history. That's a great one because that's very common to see a W-2 borrower flip to 1099 recently. As long as they have 1 year of 1099 history, the 1099 option is also a great option for the 1 to 2 year self-employed program. We also have a profit and loss program that overlays the bank statement program. Excuse me. It overlays the bank statement program. This is great for fallout bank statement loans. So loans, borrowers don't necessarily have everything going into a business or personal account. Maybe they have PayPal, maybe they have other ways that they're generating revenue. We have a profit and loss statement with or without bank statement verification. That's a great program for fallout bank statements. If a borrower has too many NSFs, we have an option for them with the profit and loss statement program as well. Permanent and non-permanent residents are also allowed on this program. So it doesn't limit, and obviously, it says permanent, sorry. Permanent or non-permanent allowed on this program. So it doesn't limit specifically to your US citizens. We can also do them for non-permanent and permanent residents. Yeah, John, did you want to say something?
Yeah, no, you're good.
Okay, awesome. And then for your qualifying income, we have a default expense ratio of 50%, okay? So default, going back to the upper bullet of 12 or 24 months for your income review, we're going to look at 12 or 24 months of your personal or business checking account statements, and we're going to default use 50%, assuming that the borrower has to reinvest some of those funds to keep the lights on in their business. Default is the 50%. Now, obviously, there's ways to get that expense ratio reduced all the way down potentially to a 15% expense ratio in some scenarios. But again, default is 50, potentially reduce that expense ratio to count more of the deposits coming into a business or personal bank account. And then in some instances, a 70% as such as a restaurant, et cetera. We also now offer 5, 6 arms and and 7/6 arms, and interest only options. I'm not sure if we had that listed there. But also interest only, 40-year interest only is also available on the bank statement program. So just a lot of different ways to qualify your clients. I do want to highlight that the 40-year interest only significantly lowers your payment. So if they plan on refinancing up in the coming years, the interest only, just to lower your payment, keep more cash in hand instead of increasing your payment just for working capital for the borrower's business. Great way to keep more money in your client's pocket.
And Jack, that's critical. A lot of self-employed people are really all about cash flow, right? Whether it's for their business or their personal life. So, which is just phenomenal. Drew, talk to us on what, obviously one of the things that we do here at Angel Oak is Jack, Drew, all of our account executives across the country, we pre-qual the file for you. And it's basically a pre-underwrite. So Drew, tell us, what you're looking for on a 1003, on a credit report, and some of the tips and tricks that you do when you are pre-qualing a borrower.
Yeah, absolutely. We're going to go through, at least, all of us are going to go through the scenario with a fine tooth comb to, look at, how long has the borrower been self-employed? How long has the borrower been at their current residence? Do they own a primary residence? Do they currently rent? Do they pay rent? Do they live rent-free? Do they live with family? So I can't stress enough a complete and accurate 1003. The loan officer and all of our account executives, we're going to talk about your scenario, but just in case we need to submit to our credit risk desk for an exception, they're going to be looking at the 1003. So if there are gaps in the 1003, if all the information isn't there, then we're not going to be able to make an informed decision on that exception. So again, current primary residence, complete income. I always suggest putting $1. We are going to calculate the income for you. So if you put, because your borrower says, oh, I make like, $10,000 a month. You submit the bank statements to us. We calculate that the borrower actually makes $13,727.82 a month. If $10,000 is on the 1003 when it's submitted to underwriting, that's what the borrower has stated that they make. So again, it's very, very important. Either if your system allows 0 or blank or just $1, submit it to us. We'll calculate the bank statements for you. That's really the only thing that I would say that is different from your normal, conventional, conforming loan application. Your income is complete, or your employment is complete, your assets, your REO, your declarations, all of your HMDA information. Again, it should be as complete and accurate as possible. So we're looking for, as far as the credit, we like trade lines. We do have, we have certain guidelines we need. I always say it's 2 for 24 or 3 for 12. So as long as they have current trade lines that are open and active, really we can, as up on the screen there, we allow 24 months since bankruptcy, 24 months since foreclosure, short sale. So we're pretty lax as far as the recent credit history, the significant, as called it, credit events.
Yeah, and we'll even allow a 1 times 30 on their mortgage, right?
Yes.
Yeah.
I also want to stress, the point of this is, guys, you just make sure your application has all the data on it, your app, your credit. We'll do all of the work for you. It's like, you don't have to do any work on these loans.
Yeah.
You know what I mean? Like, really, all you got to do is gather the data for us. We'll make that decision for you. We'll tell you if your borrower is going to be able to qualify or not. Don't trouble yourself with, even though obviously we have trade line requirements. Does the borrower, let me remember, do they have trade lines? No, you don't have to do that. Just let us, you can let us make the decision on it,
Yeah, Jack, I usually wait till later in the webinar. I mean, Drew and Jack are like your confessional booth, right? You guys, you're basically, you're really working with that originator to to find a way to get that deal done, right? And a lot of the deals we get done have exceptions on them, and that's because the tenure that Drew and Jack and all our account executives across the country have, they know the type of files that Angel Oak wants to own and close. So those are big points. And like I mentioned earlier, Drew and Jack and all the account executives will do that hard work up front. And if it does have an exception, they're going to go to our help desk and get that exception. And that income that's calculated, as Drew mentioned, and that exception is going to follow your file all the way through the process. I was on a panel earlier this week with a large national lender, and I said, it's like a public service announcement. If you know you are going to meet with a self-employed borrower, yeah, grab their tax returns if you're going to try and take them conventional, but get their 24 months of bank statements, and we'll go down parallel paths. And Jack mentioned it a little, and Drew mentioned it also. You're going to see how you're going to increase that borrower's purchasing power using the bank statements. So, Drew, what would be a reason you would use 12 months or 24 months? Give me a couple examples.
Yeah, absolutely. So at 80% LTV or less, the pricing is the same, 12 versus 24. So as John said, my recommendation for all loan officers, yeah, if you know for a fact in your initial conversation with the borrower, hey, I own the business, I've been in business for 5 years, fantastic. You're going to get the borrower's last 2 years tax returns, corporate returns if it applies. But then also recommend getting at bare minimum, get the last 12 months worth of your bank statements. You can certainly go down both avenues. When we go over how to price and submit the bank statements, we're turning bank statement income calculations within 24 hours at the longest. Our technology is actually turning them quicker, but I always set the expectation is, listen, if you give them to me today, I'll have it back tomorrow as long as you get me all the pages, all 12 months worth of those bank statements. If you're an LTV above 80, so we go to 85 and we go to 90 LTV, you're going to get a little bit better pricing if you provide 24 months worth of those bank statements.
Yeah, great point, Drew. Let us make the decision. The other, Jack, sometimes if you're looking at 24 months, maybe a person's a landscaper, right? And maybe their income is seasonal. Maybe 12 months might not be beneficial versus getting. Go ahead, Jack. I know you're chomping at the bit to
Yeah.
give an example.
Yeah. So if you get hit with inconsistent deposits, it's not extremely consistent over the last 12 months. This is obviously another good example of why you would go 24 months over 12, right? If it's a business, even in some instances, realtors, if they just have a couple big months, because you'd be surprised, a lot of realtors go on the bank statement program, on the 1099 program, and obviously BSCR, but that's a webinar for another day. But yeah. So the 24 months, obviously, to get rid of your inconsistent deposits, rate benefits, if you're higher loan to value buckets. But yeah, a few instances where you might want to go 24 months over 12.
Yeah, and if their income is unfortunately declining in the last 12 months, that's where you would say, Drew or Jack would say, hey, let's get rid of months 13 through 24, and let's only use months 1 through 12 because they still qualify. So again, there's a lot of different ways we can help you. I mean, these guys are very surgical in their approach to the pre-qual process, and they've seen, they see at least 70, 80 a month. So times the years they've been here, they've seen a lot. So go ahead, Jack.
I would say even like if you think there's a chance your borrower has declining income, more specifically for conventional, let's say, they're declining income, it's declining so much they might not even qualify for conventional. That's the reason of getting those bank statements up front, because you can shoot them over to us. You might be in underwriting conventional. shoot them over to us. We can get that pre-approval out to you if we think the loan's going to work. Then you're like, oh goodness, I have a backup option. You know what I mean? You're not dead in the water. You're saving yourself time and business, because you have a backup option now. You might have went into conventional self-employed. It's about to fall out. You already have this backup option on hand. So you're not just dead in the water and all of a sudden you get the realtor breathing down your neck. You got everyone, borrower breathing down your neck. And you have an alternate route. And you can say, you know what, borrower, I was able to save you here because we had a backup option for you.
Yeah, Jack, I mean, I'm kind of smirking here because we all get those ones, right? They tried to go conventional. They finally got the tax returns in and they don't qualify. They told
profit and loss statement or something was,
exactly. So like I mentioned earlier, go down parallel paths, get their tax returns, get their bank statements, and then you have options for that borrower. And you're not having your realtor, right? Everyone in the transaction, sellers, everyone's still going to be happy. Mm-hmm. So Shri asked a question here, and I said, even if you have a 1 times 30 on your mortgage, that would be I'll clarify that would be if you have a 130-day late on your mortgage in the last 12 months, we could still get that deal done. So just want to.
And something to mention too, one thing, John, we haven't mentioned is, I forgot to mention this, you can calculate a business income with bank statements. We can still count W-2 income as long as it's not affiliated with the business. So you have husband and wife, you have spouse that gets paid W-2 from a different business. We can still count that income with your self-employed bank statement income all in one loan. And actually, we can go up to 2 businesses for a business bank statement loan. So up to 2 businesses on paper. Sure, you could have 2 businesses and W-2 income all on one, just to maximize your client's purchasing power. So just something to consider when trying to get your borrower's purchasing power. Maybe they don't have enough purchasing power with conventional. That's another great reason to consider a bank statement loan. Purchasing power, you can use side W-2 income, part-time job income with 2 years history. Plenty of things we can do here on a bank statement loan.
Yeah, Drew, Jack went down that path. What about, we talk about that gig economy. What if someone's, W-2 doesn't want to give up their full-time job, but does a side hustle? Can we still do that?
Oh, absolutely. So as long as the bank statement income or, maybe they're 1099, they're driving Uber, they're Lyft, they're delivering food, whatever they're trying to do, they're hustling. As long as the bank statement income is at least 30% of the total income that we're using to qualify, it's going to fall under that bank statement income program. You're only providing pay stubs and W-2 for the pay stub job or the spouse that has that W-2 job. Absolutely combine it. Let's get them approved for more.
Yep. And Jack, Donald's asking here, what are our seller concessions?
That's a great one, Donald. We go up to 6%. So, if you have on all programs, by the way, 6% seller concessions, not just for bank statement, but a great resource on bank statement. So again, this is great for if you have a builder relationship, right? You can apply those concessions towards buy down. You can do whatever, even on second home and investment properties. You can contribute that concession towards buy down, towards closing costs. A great resource. We actually have a 2-1 buy down that overlays the bank statement only for primary that you can contribute. So again, the 6% is huge here. To be able to use 6% seller contributions if you have a builder relationship, seller relationship, whatever it is.
Yeah, and the market's kind of shifting. So where, maybe 4 years ago it was, seller's market, it's getting a little bit more even now. So those seller concessions are coming into play a lot more. So Drew, what about, we touched on that. There's a couple other questions. Will you do a prequal on a TBD address, to be determined, just so everyone knows that? So
absolutely. Every day, I would probably say, I would go out on a limb and say Jack would agree,
oh yeah. Yep.
I would say the majority of the files that we're doing now. We understand that you and your buyers are in a certain market where just as we said, they come to you, they say they want to get pre-qualified. The realtor says, I'm not sending these, I'm not going out with these people until they get pre-qualified. So absolutely, we'll do that all day long. Send in the bank statements. I have the majority of those TBD pre-quals. You guys are coming to us and say, what's the maximum they can go to? I can only get them approved based off of their, W or the 1040 income. Can you let me know based off of their bank statements what the ceiling is? So it's certainly an opportunity for you guys to go back to your realtor and say, hey, you know what? I just got the Smiths $250,000 higher of a sales price point. People are going to be
Everyone loves
happy with
that.
Absolutely.
And do you know what's nice about these pre-approvals too? Is we have your DTI in line. You know what I mean? We have you pre-qualified. This isn't a pre-approval that's like, oh yeah, you're good. Go find a property, right? This is hey, especially in the non-QM space, guys, you want something that's a true pre-approval, something that actually holds water. Just because non-QM loans, obviously secondary market, they can cause headaches sometimes. I mean, I know, relationships with some of our competitors, they can be headaches. But with that being said, that's the purpose of our pre-approval. We have our DTI in line, we have our income in line, we have these things in line. So this is a true pre-approval for your borrower's purchasing power.
Yeah. So Jack, so talk about, you mentioned it earlier when you talked about the highlights. Talk about the expense factor. Get a little deeper on that if you don't mind.
Yeah, sure. So depending on the borrower's business, we can reduce the expense ratio with a tax prepare letter. It needs to be a tax prepare letter signed and dated by an accountant, CPA, someone who's licensed to be able to prepare taxes. Now, what it is it's just going to be a few sentences. Obviously, you can verify your ownership percent and number of years the borrower's been self-employed with it, but also you can reduce your expense ratio as long as it's feasible, as long as it makes sense for the borrower's business. So a great example, let's say you are, what's a good 1099 business, for instance? Let's just say you're truck driving and your 1099 company expenses or they pay for your gas. That's a great example of, we can accept a 15% expense ratio because they really don't have any expenses. The company's paying for the truck, the company's paying for the gas. They don't have any other overhead as a part of their business, where that's an acceptable reason to reduce your expense ratio to a 15, a 30, depending on whatever the tax preparer signs off on.
Yeah. Yeah, thank you. I know we're going to still cover 1099, so I'm going to let Drew just talk a little bit about the highlights of our 1099 program. Drew?
Yeah, absolutely. I always say it falls under the umbrella of the bank statement program. But if you're, the scenarios that I've come into play is that, income, from the 1099 job doesn't kind of go into a specific one bank statement for some reason. It just goes in different, into different accounts. So you're still $150,000 and up to $4 million. Same purchase, cash out refi, delayed financing. Really, the only difference between a bank statement program and a 1099 is that you're providing the actual 1099s from the company that the borrower is a contractor for. You would also have to provide a most recent earnings statement from that company or a year-to-date bank statements. So the later, my recommendation always is the later that we get into the year, providing 8, 9, 10 months worth of year-to-date bank statements may not be, the best logical thing to ask the customer or the borrower for. We might as well just transition to a 12-month bank statement deal. Again, that depends on where the funds that I always say, when you get paid, where does that money go? So as long as they've been with that single employer for at least 12 months, minimum is 24, but we were able to do 12 to 24 with certain guidelines, reduction, 720 score, 80 LTV max. But if they've been with the same 1099 company for the last 2 years, let's collect the 24 and 25 1099 and the year-to-date earnings statement. Very similar to the bank statement program, where we're going to add up all those figures and get us an average income for the borrower every single month. I would bet for sure that income calculation is going to be higher than their Schedule C income and their adjusted gross income that they have on the 1040.
That's an easy bet. That's an easy bet. So, hey Jack, we're going to talk a little bit about the P&L. So we're about halfway through. So let's look at the P&L program.
Sure.
Talk about some of the highlights there and why you would use this versus bank statements or 1099.
Yeah, of course. So, and this one obviously overloads the bank statement, as you see, loan amounts up to 4 million, minimum loan amount at 150. Same ordeal. We can do purchase, rate, term, or cash out with the P&L program. Owner occupied, second home investment available. Has to be prepared by a CPA or tax preparer, someone who's licensed and is able to prepare taxes with that license. The P&L is a great example. Or reasons you would use the P&L program would be if you have too many NSFs on a bank statement loan, right? Now, granted, a lot of this will be done on our end. You know, you would submit your bank statement loan. We would get income calculated for you. You have too many NSFs, we can always pivot to a P&L loan. So it's just having more options, just having that versatility to be able to flip programs. You know, we can always do this at the pre-qual stage up front, get your loan structured to make sure it works before we get to underwriting and you're stuck dead in the water, right? So again, the P&L program, a great way to pivot with NSFs, or maybe they make deposits into, you know, I've had, you know, and we have two options, by the way. We have two options with the P&L. We have no bank statement verification with a 720 plus FICO and at least 80% LTV or less. Or obviously, if their FICO is below, we will need 2 bank statements to verify. Okay, so 2 bank statements to verify the deposits coming into their business account. Okay, if the borrower has a 720 plus and you're doing no bank statement verification, you know, maybe they have 4 businesses, right? The bank statement loan, for instance, only allows 2 businesses. Let's say they have 4 business checking accounts and all of their income is going into those 4 statements. That's a great reason to pivot to the P&L program because you can't quantify that on the bank statement program. So it's a great fallout. It's a great, hey, your business bank statement loan didn't work. Your personal bank statement loan didn't work. We can pivot to the P&L upfront before underwriting. So that way you're not losing your hair. You're not pulling out your hair when you get to underwriting because all of a sudden, you know, your loan has fallen out with a bank statement because you had too many NSFs or you had something else that disqualified with a bank statement loan, and we were able to pivot to P&L up front.
Yeah. Thank you, Jack. And Drew, Jim's asking a question here that you guys have answered earlier, but I think it warrants repeating. If a borrower has multiple bank statements, will we allow them to use both bank statements?
That's an incredible question because I was actually just going to add. So your short answer is yes. And I was going to add to what Jack was saying is that, yes, we will allow multiple bank statements for the same business or multiple businesses, but the term is always used, the funds can't commingle. And I have this conversation up front. I'm sure Jack and all of the AEs do say, listen, we got to make sure that the funds don't commingle, meaning that they don't transfer money back and forth. You know, I've had lots of borrowers or the loan officer say he uses this account for, you know, cash deposits. All of his credit card, you know, money comes into this account, but he never transfers. When we get the bank statements, money always transfers because there's always one account that's a little less than the other. You know, so that could be another reason why we would transition to a P&L, where as soon as you have commingling of funds, we can't use one of those bank statements because we just can't follow the money and where it's coming from and where it's going to.
Yep.
Those I've had several of those. Hey, listen, let's transition to a P&L. The borrower still makes that money, so the CPA or the tax preparer should have zero issues with creating a profit and loss because that's income, So that's a perfect example on how a profit and loss statement can be used.
Yeah, and both you and Jack have said this so well. It's let us do the work. Like Jack said, we'll do the heavy lifting for you up front, right? We're going to hold your hand through the whole process, and we're going to decide. The AE and you will decide which is the best route to go, and which is going to benefit the borrower. So we'll do all that heavy lifting for you up front. Hey, Jack, Donald's asking another great question. What do we need for proof of ownership of that business? Like if they're 50-50, or you mentioned earlier, we'll go down to all the way to a 25% ownership. So
Yeah.
elaborate on that.
Great question, Donald. We can use a tax preparer letter. So a tax preparer to verify that ownership percentage. We can use an operating agreement. An operating agreement is another great, as long as it's signed and dated, obviously. we can use an operating agreement. And there are a few other sort of like EIN. If they're 100% ownership, it's something that's it's going to clearly state on the EIN. But typically the main ones, the easiest one to obtain is going to be your tax preparer letter. Verifying your ownership percentage, or an operating agreement that has been obviously complete already.
Yeah, great.
Secretary of State website should have something like that as well.
Mm-hmm.
I've sent people there for it as well.
Mm-hmm.
So, Drew, what do we allow for NSFs? And again, this is probably something we get a lot of exceptions on. So, if you don't mind sharing that.
No, absolutely. So we'll certainly look at, depending on the LTV, we'll allow up to, I think I'm blanking on it actually now. What is it, 10? So depending on the loan to value, the higher the LTV, and depending on the score, we'll allow up to, as you have a higher than a 720 score and an 80 LTV. I believe the number's 20. So certainly send those bank statements in.
Wait, what was the question, John?
NSF's allowed in a year.
Oh, yeah. Okay. Yeah, NSF's in a year is 10. It's 20 if it's 720 plus and 80% or less, and then it's 10 for all else.
But what I want you guys to know, though, not you guys, I know you guys know this, but everyone on this call is that, if there's multiples in one day, that counts as one. So let Jack, let Drew, let any of our other account executives across the country look at it. Plus, we have our team of experts that calculates the income for you. So I know Drew, I know Jack, they review them once they come back. They don't just, and if they need to go get an exception on it, they'll get that.
24 hours. Give us 24 hours.
Yeah.
That's it. Send us the bank statements, give us 24 hours, and we'll have all the answers for you.
Exactly, Drew. Jack, what do we require for reserves?
3 months reserves for all of our first lien bank statement programs, cash out, purchase, rate term. It's 3 months reserves across the board. For subject property only, that's a big one. So again, we're not requiring your borrower, their mother, everyone to cover reserves. It's literally it's 3 months reserves. We can also use stocks, bonds, mutual funds, 401k funds to cover your reserve requirements. Okay, so don't feel, and we can also obviously use your business checking account, business or personal. We can use business funds towards your reserve requirement. So a lot of times, 3 months reserves, that's pretty aggressive. You can use a lot to cover your reserve requirement. A lot of different options.
We lowered that, I think, from 6 months to 3 months about a year plus ago. Yeah. So yeah. So great point. All right. So we've covered all like Drew said earlier, everything that comes underneath that bank statement umbrella of products. So Drew, show us and again, just want to make sure everyone knows this is being recorded. If we didn't get to all your great questions, we will have your account executive reach out to you today and get with you. And again, we'll get this recording out before end of day tomorrow. So I'm going to go back to the homepage here, Drew. So someone wants to get rates. Someone wants to send you that 1003 and credit reports and the bank statements so you can pre-qual it. How do we do it?
So yeah, so you just have to remember our main website, angeloakms.com, and you're going to go to the non-QM quick quote. You do not need credentials. I'm not sure how many people I call or email me or text me, hey, I need credentials. I need to price something out. It's right on our main website. You can certainly go, and I will walk you through as many times as it takes for you to become comfortable with it. So you're clicking on the broker channel. And then, of course, we're going to the bank statement 1099 P&L. Just a reminder, make sure you check out some of our pricing on our 5/6 and 7/6 arms. So really, you're going to be put into the main section here on your bank statement. Everything in red required to be filled out. Your housing history, as I mentioned before, just make sure, we'd like to verify that the borrower is making some sort of payment if they're renting, or if they're not, we just need to pivot to a certain, LTV or credit score. So you're filling out all your information, 24 months, compensation, we'll just do borrower paid. And so within, what was that, 15 seconds, we have our pricing. Yes, yeah, right.
Even with John at the helm.
Yeah, exactly.
Jack.
Yeah, so you're looking at, so we got 75 LTV, $500,000 purchase in our beautiful home state of New Jersey. So it's defaulted to our arms, but as you can see, just in case you want to compare it to the 30-year fix, just easily click on over, and it refreshes. I really, and obviously I'm biased, but I've gotten multiple, it's impossible to continue to count how many people say that our system, our pricing system, is far and beyond the best that they've experienced. You say, you know what? Hey, maybe I want to change. Oh, wait, you know what? I pulled a soft pull and I had a 740 score, but now I have a tri-merge and his credit score is now in the 760 range. All you do is go make those changes. It refreshes and you know exactly what your pricing is to be able to give your borrower.
Yep.
Once you say, you know what, I have these bank statements, I need Jack and Drew or anybody else to get us their income calculation, just click once on a rate that you like. It's going to open up a spot on the right-hand side for you to fill out all of your information. If you don't have an account executive, we'll make sure that we get you in touch with who your point of contact is. And as you scroll down, there's going to be spots that you can securely upload your 1003. And that's a PDF 1003. Make sure you include that lender loan information so we know what the taxes and the insurance are. You're going to upload your credit report and you're going to upload all the bank statements. Our system will accept 24 attachments. So don't fear that, oh my God, I have all these 24 PDFs that need to get uploaded. You'll easily be able to upload those documents into our system. That is technically all that's required. I always use the term a trailing document. Our bank statement questionnaire is a very simple one-page. It kind of expands on what Jack has been talking about, and it really kind of helps us drill down into what type of business your borrower has and borrower runs. Do they have 10 locations and 100 employees? And are they a restaurant? Or are they a sales, consultant? They work from their house and they have one employee. That's really going to drive the direction of possibly exploring what that lower expense factor is. But
Yeah.
that can come at a later time.
Yeah, and that's critical too, Drew. Just getting that complete picture. It's kind of tying the 1003 and the credit report with a nice little bow, that business questionnaire. So, great stuff.
And I recommend.
Yeah.
Oh yeah. All I was gonna say is I recommend if you've got your 12 months of bank statements, credit report 1003, I recommend going ahead and downloading that bank statement questionnaire. Go ahead and submit your pre-qual. Go ahead and work on the questionnaire on the side while we're in the process of reviewing your income. But make sure to get that completed ASAP and try to send it over prior to that income being completed, because it's only going to help us make a decision on your borrower's income.
Yeah, and so as long I say the exact same thing. So it's hit submit on the 1003, the credit report and the bank statements within the next 24 hours. Ask your borrower, take a look at, download it, take a look at the information. And as long as you ask your borrower, hey, do you have multiple locations? How many employees you have? And then you and I or your account executive has that conversation. As long as we get and take a look at that questionnaire a couple days after, or ultimately before the file goes to underwriting, we can certainly get you that pre-qual out, especially on those TBDs, and get your borrower house hunting.
Yeah, and Drew said it a bunch of times, less than a day, you'll get this back. So, and that's the income that's going to be used throughout the entire process. So, I know you could go tax returns out to 20 different people and you'll get 30 different opinions on what that person makes. But, with these bank statements, it's pretty clear. And like I said, we have a great team behind the scene that calculates all that stuff for you. And then Jack and Drew and all the other account executives across the country will review them to make sure we're all on the same page. So, all right. So now you've sent us a prequel and you love the process. How can I get more of this business, right, Jack? We're going to show, we serve underserved borrowers, but I believe this might be one of the most underutilized marketing portals. So take us through how to get there, Jack.
Yeah, so for the marketing portal, you're going to click on your TPO portal login, and you're going to log in with your credentials. If you don't have credentials, get in touch with Drew, get in touch with me, get in touch with your account rep, and we'll be able to set you up with your credentials. Okay, so you're going to go ahead and log in to your specific portal to access the marketing portal. And guys, you're going to see a bunch of cool tools here to be able to access through our portal. I definitely recommend, obviously, just going ahead and getting in touch with us so we can go ahead and set you up with it. And John, we'll start with the flyers.
Yep.
And let's say you're joining this webinar today just because you need more business, right? Let's say you're trying to get more business. Guys, we've got flyers for CPAs. You want more business for bank statement borrowers? Guess who's writing off their income? CPAs.
Just got out of their busiest season, right?
So just got out of the busiest season. They might be mad at you if you email them, but you'll get more business. But CPAs, guys, your accountants, if you have friends that are CPAs, accountants, that they have clients that can't qualify because they're tax deductions or wealth advisors, right? Wealth advisors with, borrowers looking to invest their money in other ways. DSCR, story for another day. But wealth advisors, your CPAs, guys, we've got flyers for you through this portal for both of those specific clientele. So right here, obviously, you can personalize these flyers. You can throw your name on it, your contact information. You can, share these at realtor presentations, which we also do. Okay, actually had one yesterday. Again, we get in front of your realtors for you as product experts, and we will sell this stuff for you just to create more business for you. Realtors, by the way, are a great 1099 loan. Right? They're a great 1099 loan and a great DSCR loan themselves. So if you aren't having if you're not having a realtor presentation with one of your Angel Oak account reps, you're just doing yourself a disservice, because that's just free business where we'll get in front of your realtors for you, 20, 10, however many it is. And guys, we will sell them on, hey, 1099 loan. If you have tax deductions, you've got a great CPA, guess what? There's a 1099 loan for you. There's a DSCR loan for you if you're looking to build a portfolio of properties. I mean, guys, it's just free business, and we have the whole deal here for you.
Yeah, Jack, so to give us a stat that we have, 9% of the loans we close underneath the bank statement umbrella are realtors. So do the math, get 12, 13 realtors in a room. You're probably going to get one of their loans. And as Jack mentioned, a story for another day, the debt service coverage ratio program, they probably close more than 9% in that program. We don't look at income or job information on that program. So
there's nothing that's going to win your realtor over more than doing one of these loans for them. I tell you what, you will earn their trust. And if you're hesitant about it, just call us. I mean, we're going to structure your loan for you up front and be able to advise, hey guys, this is going to work. This is a good loan. We'll be able to do this for you. Call us, contact us, get if you want to know turn times, call us. That's what we're here for.
Jack, I'm going to use Donald. He's asked. Look, we had a lot of great questions, but Donald asked a question. If Donald's an originator and we go in there and present on his behalf, we don't say anything about Angel Oak, right? We just say, I'm just one of Donald's investors.
Yeah.
And we have access to these type of programs. Donald has access to a lot of other programs. And as you go through your presentation, so what are you going to do when you come across a self-employed borrower? You're going to refer them to Donald, right? And that's how that presentation looks like. So, so Donald, take advantage of this. So, Jack, let's talk, or Drew, if you want to chime in here, let's talk about the social media posts. We know how powerful social media is these days.
Yeah, you got it, Drew.
Yeah, absolutely. So as Jack said, and John, it's a very underutilized, I believe, part of our offerings to you. If you're not on social media, I'd be shocked if you're not. But anyway, we presented to you none of that on the flyers, on the realtor presentation, on the social media stuff. Angel Oak is nowhere to be found. Take it, use it. It is yours to use to generate business in this particular, for these particular programs. And we are there to be able to, once you bring those, as they say, once you bring that fish onto the boat, we will help you fillet it without a doubt.
Hey, Drew, what does it cost for an originator to use these marketing tools?
Zero.
Sorry, what was that?
Zero. Exactly. Yeah, there's not a lot that I always say that there's not a lot that you really are required to remember about our programs except our phone numbers. Give us a call. I'll walk you through the programs, get you, into the marketing portal. I can help you if you'd like. You can upload your picture. You can upload your company's logos and use them for your own.
Yeah, guys, I think and here's that realtor presentation that Jack and Drew were referring to. We even have a flyer to send that out to generate people to come to that event. And like I said, whether it's in person or via, Zoom, GoToMeeting, Teams, Jack, Drew, and all our other account executives across the country are willing and able to do a fantastic job for you. But I where I get a little crazy, we'll get off this call and someone's not going to take advantage of this. And that's a shame because it is the fastest growing segment of the workforce out there today. So I would market that to, I know Eric Morganson says it every time. Where do you find a self-employed borrower? Open your front door. You will trip over them, right? They're the landscapers, cleaners, roofers, doctors, lawyers, right? They run the entire gamut. That's what makes this economy move, are self-employed people. Jack mentioned truck drivers. If you're near a big hub anywhere, transportation wise, it's endless. It's endless. So I know we're coming towards the top of the hour. Yep.
And John, I also, just to wrap up too, especially with AI, and now entrepreneurs have such a unique ability nowadays with AI to be able to scale up their own businesses. I expect in the near future, it's only going to increase. You know what I mean? I mean, it just, entrepreneurs being able to integrate new technologies and AIs into their own practices. And I only see the need for self-employed loans just to increase.
Yeah, Jack, I haven't updated the numbers, but in November 2025, 535,000 new business applications just in November 2025.
Really? Yeah.
Yeah.
There's your answer. Yeah, there's your answer right there.
Yeah. So, all right, Drew, in closing, anything else you want to share?
The bank statements, I always use it. I've overused it. They're not difficult. They're just different.
Yeah.
Go down both lanes. Get your tax returns. Get at least 12 months worth of bank statements. Let us do the heavy lifting. Give us an opportunity. Learn your business.
Jack.
You just save more loans. That's what we're here for. Save more loans. Keep your relationships. You know,
Yeah.
that's what we're here for. We're doing all the work for you on your pre-quals. Just again, you don't put yourself in a bad situation if you're going even conventional with your self-employed individuals, or you're looking for purchasing power. Don't put yourself where all your eggs are in one basket. Again, that's what we're here for. We're here to help you out and to save your loans. And again, just to make you guys look good at the end of the day.
Yeah, Jack, and I wouldn't even save loans. I would really go out there and proactively market for these loans
Oh, yeah.
because they're our average loan amount on bank statement loans is probably well over 500, maybe closer to $600,000. So one last question, Kay, you got it in. How long does the realtor presentation take?
I mean, mine yesterday was about 30, 35 minutes. So
It can be as long or as short as you want.
need. Yeah, as short as you want, as long as you want. If you only want to cover DSCR, great. If you only want to cover bank statement, great. You know, however, it's up to you. You're the bringing all your realtors together. We'll just do whatever you like. If you want to do more of a Q&A, we'll do a Q&A. We don't even have to do the presentation portion of it. You know what I mean?
It's exactly, yeah. It's this. We just provide you the PowerPoint for the structure of the presentation. I've had other AEs say that they'll include that PowerPoint with VA or whatever, conventional jumbo, whatever. So it's as long and short as you want, Kay, but take advantage of it. I promise you won't be sorry. So, okay, guys, we're near the top of the hour. I want to thank everyone who attended, and for those who registered. Everyone will get a recording of this by end of day tomorrow. Thank you for all the great questions and the interaction. Jack, Drew, appreciate you guys giving up your time and your expertise. It never fails. You guys are the best of the best. So on behalf of everyone here at Angel Oak, thank you for attending today, and we appreciate your business. And if you have business and you're not doing non-QM, reach out to us. We will definitely help you close more loans in 2026 and beyond. So thank you everyone for attending. Appreciate it. Have a great afternoon.